Okay, so now we're going to get started, and we give the floor to our presenters, Sergio Penilla and Frida Ortega. So we'll get started with our panel. We're going to keep it until 12, and at 1 p.m. we are going to have our translation service until 2. And hopefully you will enjoy this day. Every day is important, but the most important day is the one we are currently living. That's why this is the most important day. Please, Sergio and Frida, go ahead. Yes, thank you, Mauricio. Well, as you were saying a while ago, this is a very different presentation we are going to have. We are going to have our discussion panel. The main topic would be the effects on financial information by COVID. And let me give you just a brief introduction, so then we are going to present the topics the panel is going to have. But undoubtedly, one of the pandemics that have brought unbalance for these last years has been the SARS-CoV-2 coronavirus creating COVID-19 disease. And as we've all felt, the companies all around the world are now facing and confronting a loss in their revenues, volatility in financial markets as well, and in some countries, and maybe all of them, governments have announced and kick-started actions, emerging plans in order to support financially and in terms of tax economies. So that is why it is essential to touch upon this topic, which we will try to see from the financial information standpoint and how this is impacting the international standards. And undoubtedly, as a country level, we have a deacceleration in economics, and we should also mention the supports and subsidies being granted by different nations and the application of our public expenditure. So at the level of the country, we have a large impact due to COVID, and also at a micro level in the company, as it was mentioned, the income basis is not complying with plans, with budgeting, and due to the lack of resources recuperation, the fact of being able to comply or not with some commitments that were already made, and also the volatility in the financial markets have brought unbalance in the terms of finances among companies. That's why we are going to cover some topics I'm going to share. And if I may, please, just give me 1 second to share the screen with you. Adrian, please, would you be kind enough to give me the presenter's role so I can share some slides with the public? I believe I'm already there. Is it sharing already? Okay. So, as I was telling you before, the main topic would be the effects of COVID on financial information and statements. That's why I believe that you are already visualizing the presentation. And who are going to participate in this panel? Juan Carlos Sánchez from Mexico, Pedro Gaytán from Mexico, Diana and Karina Hernández from Colombia, Carlos Reyes from Venezuela, Miguel Ángel Quiñones from Mexico, and myself from Mexico, Sergio Penilla. That's what we will be addressing today. We have around 3.5 hours, almost 4, in order to touch upon topics that we've now posed for discussion activities. We're going to talk about financial instruments, the reasonable value measurement, inventories, also leasings, the contracts for insurance and coverages, the subsidies from the government, some motivations and subsidies, and the acknowledgement of income and the business that is ongoing, and some revelations. I believe much information is going to be revealed afterwards. And also, what I would like to do is to get started by addressing the following. The participants already mentioned by me are auditors, counselors, consultants, and that's why they have been pretty close to the effects of COVID-19 in finances and financial information pertaining to companies. So that is why I'd like to get comments from our panelists and how they are experiencing and perceiving the bullets I've been mentioning in other countries. Like, for instance, Colombia. We have Diana and Karina. Please, would you be kind enough to tell us how you are experiencing the pandemic in Colombia? How do you feel the economy right there? And let me see. Diana maybe is not connected for the time being, so let's go to Carlos Reyes. He is from Venezuela, and we would like to know how they are experiencing the pandemic over there. Please, Carlos, would you tell us? Yes, good morning, Sergio, and colleagues out there from Mexico and the world that are now listening to us. Are you copying what I'm saying? Yes, we can hear you loud and clear. Thank you. Thank you very much. So, yes, indeed, here in Venezuela, I would have liked that at some point any other colleague would have taken the floor before me, because definitely the Venezuelan case is extremely particular, as it could be for many other things. In 2021, we have a special case for Venezuela coming our way. For those who do not know that, that's how far we've reached. Yes, Sergio, and in Venezuela, in addition to the pandemic we've been suffering, we also have Chavismo type of government, and from there we've been trying to get along as good as possible, but this pandemic has indeed hit hard as a business level, impacting the businesses all around, and basically companies that are considered as small and medium size here in Venezuela, because this type of companies, this dimension of companies, small and medium, have been able, how can I say this, to establish mechanisms. They have adapted their operations in order to get ahead with their businesses. Let me repeat this: from the first pandemic that I would say is Chavismo, up to now, and up to this current days. And basically, you may realize that here in Venezuela, the large companies, like in the case of the Polar Group, that maybe you know those companies that have been grouped to produce the traditional beer here in Venezuela, but also we have other business niches, like for instance the food sector, and of course our very well known flour for arepa making. The arepas are pretty well known around Venezuela, producing oil and other edibles, and this group Polar is a company that is moving along the food industry. I imagine that in the rest of the countries, this type of companies have been impacted due to COVID. But if they are to adapt, if it is necessary, they could then get ahead with their businesses, and maybe they could even be successful. In this case, this group of companies have been kept in under operations, not that fluently, but with a diminished difficulty, and as far as we've known, they've been able to comply with the supply of their products to their clients and with their suppliers in the case of payments and liabilities, and in case of any other creditor or employee, and even the government, I would say. So the small companies that are very numerous here could not resist this hit by the COVID. They could not adapt to the new reality in terms of their operations because their management was not skilled enough to get ahead, or they were already blown by the crisis coming from before. The economy has been reducing 80%. Please, just give me 1 second, because I believe there are some noises. Maybe the microphones should be off for the rest of the participants, if you are kind enough to turn them off. Sorry for that. Yes, you were saying that the small and medium-sized companies are now going through a critical situation due to the lack of forecasting they've had and the lack of certainty as well. Yes, quite difficult. Many companies have been reinventing themselves, refocusing businesses, then getting fit according to the situation, and possibly many other companies should know about this. Many companies have gone to the delivery retailer mode, selling products like, for instance, groceries online, and they've migrated to taking their dispatching operations through delivery systems, and that activity has emerged. It has been developing in a great deal, and as we know, our government is not precisely to help out, and at times it is not because they do not want, it is that they are used to that. So I'm going to develop the delivery topic, but wait, there is no gasoline in an oil-producing country. Go figure. So here, what I would have liked is to listen to the other panelists first, because we have many issues to deal with. Yes, Carlos, you have an atypical case, economically speaking, and this is not from current times, but from some time ago. Thanks for sharing this first perception on COVID-19. Right there in Venezuela, I can get to see Diana Hernandez already connected. So then maybe she could tell us in general terms, what's your perception? You are pretty close to Colombian entrepreneurs and business people. How do you perceive the pandemic in a micro and macro level? Hello, Sergio. I didn't have very good internet connection. Maybe you can hear me well right now. Yes, we can hear you loud and clear. Okay, so greetings to the associates. I'm pretty happy to join you. Even though we are away, I'm pretty happy to greet you, and hopefully we'll meet again soon. In Colombia, we are pretty positive. We are the happiest country according to surveys, so we are quite positive. Entrepreneurs are like that as well. And in the last surveys that we also shared in the UC&CS magazine, 42% of entrepreneurs would have expectations that will keep on growing. During the rest of 2020 and 21, 30% growth approximately would think that we are doing the same, and the rest would say that we are not doing that well. Is this impacting us? Yes, different from Venezuela. Now that I was listening to Carlos, the country here has generated essential aids for social security, labor, taxing, in terms of changing the days in which taxes are to be filed, and the tax to consumption generated in restaurants is frozen until December. And also the first necessity health products like mouth coverings and so on are now frozen in terms of prices. But we've seen that the politics and the situation right there, now we can get approvals ceased according to the Constitution. Many aspects fell down, but we are pretty positive in terms of our economy, and I believe that tourism, entertainment, like it has happened all around the world, this recreation sector has been hit hard. Also, the sector of restaurants have been very impacted. That's why the economies, and as I was looking through figures, we have 9-12% downward economy, impacting sectors as well that will not recover that easy, and we need to focus on services and also on how we can deal with our current situation. So that's the background, I would say, about my country for the time being. And maybe Karina would like to say something else, probably. Yes, Karina, we are asking you if you would like to add anything else. And as we are saying, these are situations that are not to be compared, Colombia and Venezuela, but the difference would be governments as such. So yes, indeed, we would like to share with you how the pandemic is being experienced. And I would kindly ask you to close your microphones for the sake of audio. And please, Juan Carlos, Pedro, Miguel Ángel, tell us, how are we perceiving the situation here? Because you are pretty close to business people in general terms. So as a background, and then we can go into our proposed specific topics on which our financial statements are based. Please, just a brief background and introduction for sharing with our associates around the world in terms of COVID perception. Yes, Sergio, if I may, I'd like to say that in the particular case of Mexico, it has hit hard. We haven't had the sanitary measurements in place as they should, and the economy has also reduced, as Diana was saying, in Colombia because of the essential and non-essential division of activities. That's why the non-essential activities have experienced a great deal of problems in their economy and liquidity, and some of them have been closing down, and others would have business risk that is considered as high. So the people are quite concerned. Business people are very concerned about the future of their companies, mainly in the industries regarding restaurants, entertainment, tourism, that has been blown pretty hard. And as Diana was saying, I believe that it is quite similar. The impacted sectors in several countries at large, and the government has not working well because of the lack of supports and aids for entrepreneurs, and this is creating a great concern around the country. Yes, Pedro, you are just right. My perception matches yours. I believe that the Mexican government has not worked hard in order to activate economically our activities. But in the federal government level, I believe that in some states, we are actually having some financial injection for economy to get activated. Like in the case of Aguascalientes state, there are some local plans in order to reactivate the construction sector, and mainly with the public works bringing about local economic benefit. So then, now we are going to get started with the agenda we've proposed for today, and obviously an impact that would definitely be reflected on financial statements, and that we for sure would need to be especially careful in order for us to read what we have in our standards for the reasonable value consideration about these topics. I would like to get the thoughts and the analysis from this standpoint from Juan Carlos Sánchez from Mexico. Juan Carlos, maybe you are there. You can turn on your mic. Yes, I'm right here. Hello, how are you doing? Okay, let's talk about financial instruments, if I may, and maybe I'll be able to share a summary, a slide, that it is just to serve as a guide of on the topic of financial instruments, which is the longest topic because it engulfs the essential of the company, that is to say the collectibles. I believe that we are now getting it just right. Yes, you are ready to share the receivables. Okay, so this is the presentation on the screen. Okay, I will give you the presentation mode. This is a summary of what we've already published. Maybe some other details were added, but basically it has already been published. So as I was saying, the financial instruments, and I would like to give you a comment first. What we are going to see right now, even though this is based on the IFRS, this is what I see, personally speaking, of what could see for the small and mid-sized companies and the colleagues in Mexico, that is quite similar to the IFRS in Mexico, because the IFRS in Mexico would go hand in hand with the full version of the IFRS. So this is applicable to both principles or standards. We have the Mexican ones, the international ones, and for the small companies and mid-sized companies. But the analysis here is that we are kind of not that we are not believers that it is going to be easy. This has to do with the fact that some of the figures from our clients would then have to be revised. I would say that the impact from COVID would have to deal with the appraisement of assets and liabilities in every sphere, with fixed assets, the long-term ones, as well, because everything should be reappraised in terms of how the business is going to operate, at least in the next 12 months. We need forecasts, and these are difficult to complete because this pandemic is bringing about a new situations. We've had economic downturns in the world, but due to natural causes. For instance, the process of economics evolution could then drop, and we have curves because of demands and decreasing behaviors. But this is like some stroke or heart attack. It is not that the people would not like to consume. Everything has been stalled due to a disease, and we need to reactivate ourselves after this heart attack kind of situation. So we have a decrease in this year, 2020. The OECD is telling us that they are expecting some growth by 2021, and it is logical because what has not been spent today, it is going to be spent in the future. That has happened in some other downturns, and even though with the downturn, investment could also happen, and even though the sales are dropping, you are still investing in manufacturing sites. And they say, well, let's think that the people are not buying tires for the time being, but later, sooner or later, they will. So the demand is going to grow. That's the forecast because of the growth that is coming our way in the future. So I can say that the dimensioning we should give to the issue is that the company could then be involved in a difficult situation, that the financial information would then have to punish receivables or problems with banks because of lack of payments. But we need to see the future horizon. If this company is actually not going to be able to operate. There are some situations in some companies that have been stalled due to legal aspects, but that do have the potential to sell. So the people would then be expecting to open up or to get the confidence of people to get started with their purchases. So if we see this from the focus of our IFRS applying to the small companies. We have regulated the receivables, the payables, the coverages of any sort, and also deterioration of financial instruments involved in these two standards. Sorry for that. So for me, the most important thing, and I believe that for our customers at large, the issue is going to be with the expected credit revenues, because the portfolios, even though we haven't detected lack of payment, that is to say that we cannot consider losses, we do have delays. We should wait if this arrearage is going to be recoverable. But that is something that would call upon our judgment. Every auditor or responsible for information would then have to assess how these analyses are practiced. We have particular cases. We have a decrease in businesses that is going to impact the cash flows. So one of the effects that, according to me, is going to be essential is to then analyze our receivables. The new standard is telling us that we have mechanics to follow. And please remember, this is not for the past due portfolio analysis, but the portfolio of those receivables that are not past due, that would then have the risk of becoming not receivables. So the challenge is to then classify according to their maturation date, and we assume that a piece is going to then experience issues. So then we need to estimate a factor for that. And here the fact is that the standard is asking for 3 levels. Sorry. Please, the participants need to turn off their microphones. Just leaving the microphone of our speaker on, and the rest should be turned off if you are kind enough. Yes, and before you continue, I'd like to say something. You said that some of the companies that you've seen, and this is part of the experience that you are sharing with us today, is that in these critical times, and in spite of precisely the stagnation in the recovery of portfolio, investments are still happening. This means that we have very good plans and finances for these companies. Otherwise, and if you are depending upon your operation cash flow, investment is not going to set forth. Yes, these are matters that I would say that for some reason they are business people. They have good imagination as entrepreneurs. It could be that some businessman is establishing a business for trading, just buying and selling, but there are other entrepreneurs with capital and vision. The capital would not pertain to the company. The company is maybe losing or experiencing problems, but the investors do have capital or would then get it somehow. For instance, the posting that I was telling you about, the Goodyear company that I audited in those past days, we have that scenario. As a matter of fact, they were actually acquiring another vulcanizing company because they saw that downturn was going to then bring about the fact that maybe the drivers and motorists are just repairing their tires for their time being and not getting new ones, but necessarily they would then get new ones. Sorry? Hugo, please, you need to turn off your microphone. Would you mute your microphone, please? Thank you. So as I was saying, I have a customer that is manufacturing textiles, fabrics. So the forecast for them is that at least from now until December, sales are going to be low, but in the first months of January, February, March, the manufacturing people would get started with their production, and demand of this product is going to be huge. But every entrepreneur would have different scenario to discuss. And I can get to see from the OECD analysis, who are specialists, they're saying that the world is going to decrease 3.2% worldwide, and they are going to have a slow growth by 2021. Yes, you're right. That is at a worldwide level. What are we expecting? Because we go hand in hand with Americans. So whatever happens there is going to happen here. We are tight. So the problem I see in Mexico is that we have an internal issue. The hotels, restaurants, small businesses, taco shops, and so on, and these outlets or selling points, they have had to close because they are living hand to mouth. But we have a net revenue that is reasonable for 1 million maybe, but in their personal accounts they have 20 million, because we need to ponder that for instance, I have a company complaining about the drop of sales, and I tell them, well, last year maybe you earned 30 million pesos free of taxes. Now you are going to earn 10. For them, that is an issue, of course. That is to say, yes, we need to think that we have accrued revenues from past years. But right now we've had a drop for 8 months. Maybe it is 5 months of downturn, and the companies already had the revenue in place. For those that are good businesses, I can assure you that the large bureaus are not experiencing that much of an issue because of the accrued revenues. If this goes for 1 or more 2 years, then problems will arise. But according to the clients I've known, they do have capital. I have this pet food company being counseled by me, and independently of their issues today, the stakeholders have some revenues to get from sharing. Each one has gotten 40 or 50 million pesos they could be able to reinvest, because the company has not reached the crisis point. But these are scenarios I've seen because I don't have a small clients, because I'm coming from Deloitte, and what I did is that my specialty is to handle this type of clients. I could not handle a very small company because I lack the experience, but those clients handling large bureaus, I can engage easily. So going into standards, what I'm telling you now, I'm telling you because of the business that we are going to study with Miguel would then have different points. We need to see the forecasts, the market, and what the company is proposing, and maybe they do have the resources and the supports for that. 8, and we as consultants, we should be telling our clients, look for that aid, issue some liabilities or do something. Maybe you should negotiate with banks. Yesterday we were saying, well, for the small and medium-sized companies, that would be the easiest. But what if the bank is asking for financial statements under IFRS, and the investor would then ask for them compulsorily? So that is something that as consultants we need to assess and say, well, this is more convenient to handle different standards because of your type of registration. In Mexico's case, maybe they say my piece of land is more valuable. Now go to the IFRS and you will get reappraised, accepted. We as professionals need to know the full IFRS and the Mexican version and the US GAAP, because these are financing strategies we need to handle with our clients. The clear example that is quite clear is what I'm telling you now. The bank would say, well, I would like to give you a loan, but your equity is so low. If you give me a reappraisal, then maybe I'll be able to lend you. And how can I introduce this reappraisal? Well, we need to do that by turning into IFRS. Yes, sorry for the interruption. You are talking about that elite type of companies, because what you are saying is that you have the full application of the IFRS. So this would bring about a cost that as at a market level is not that affordable, because of course if you convert for the first time, you will have to pay out a cost of considerable fees, right? Well, up to now, I haven't seen anyone telling me that maybe a small or medium-sized bureau collecting 35 today would charge 70 because of doing it under IFRS. Maybe for starters they would, but they wouldn't go that far. I've handled both versions and I can tell you that the difference is not that much. And under the pymes we would have to see, but I'm not saying this because of the large companies, but many other small companies would then have to assume the operations of large ones because of projection's sake. But that is a topic. If you are handling the IFRS and the large companies consideration, I have a client that is handling the Mexican IFRS, but the board is saying, well, maybe in the future we'll have the necessity to go into the stock market and the IFRS is going to be necessary. Yes, Juan Carlos, we have other topics to deal with, but in 5 minutes, how do you think we could give a plus in terms to assess the expected losses according to COVID times, or maybe giving the important bullets for those who prepare financial statements for them to assess financial instruments in that perspective? According to the standard, we already know how that goes. We need to follow the steps given by the standard, and in real terms, what we need is to go through the portfolio, and in here, the standard that would have to deal with receivables, number 9, is giving us two options. One is that we can do it separately for each one of our clients, and I believe that would give us, that would be made by a small company or globally consideration. But according to the situation nowadays, we would have to then determine if there is risk concentration for several metrics exercises to be performed. We need a matrix saying, well, this is an estimation need, including the portfolio that is not past due at the different dates, 30, 60, 90 days, as we did in the past. There is another matrix where we are going to say, well, this would have to deal with the hotels or airlines. We have greater risk. Separate matrix for that case. We would need to separate and modify our analysis. And the other point is that maybe I have 20 or 30 clients, but I have one that is representing the 40%. Well, to that one, we need another matrix. So that is the common sense. We need to analyze our clients in order for us to see which ones fit with the troublesome or with the ones that are free of any issue. Please, we need you to mute your microphones for those who have just joined. This is allowed by the standard. The only thing I would say in a nutshell is that we need to analyze and assess all of this. This is not the only thing established by the standard. I have already established here that the measurement should be performed in order that to get the reflection of pondered probability with no bias, because I think that the portfolio, for instance, we can have a client that has never been in arrears, and right now they have 30 days of maturity. This is mechanics included in the standard, and it is kind of complicated because of the content of the standard. If this client has never been in arrears and you have applied 0.5 risk probability, now that 30 days will elapse, then you have the obligation to change your focus, giving greater risk. Great. Those who had a different scenario and that are now changing scenarios would require an assessment that is going to be different, maybe skipping to phase 3 that are quite high in risk. And what I would say is that we need to do that exercise with the necessary revelations, because maybe we are not disclosing that we had a high risk portfolio. We need the concentrations of risk. Sorry. Jorge Arturo Gallegos, please, could you turn off your microphone? And David Guzman is telling us that we should take into account the volatility of some financial variables in order to determine the costs in many senses. How? Please repeat that. Yes, David Guzman is telling us that mainly for the measurement of financial instruments in these days, we need to take into account the volatility of some variables, financial variables, for the determination of these values, maybe the present value. If you have already calculated, we need to go through it once again, because the rates might be changing for the present value consideration. But there are many things that are impacting. Yes, volatility should be defined. There is a stall in economy, a decrease, a downturn, that in the case of the portfolio is then bringing about many risks. Volatility could be due to exchange rates, not given so far the interest rates in the market, what we are going to see as reasonable value, how the market behaves. Because let's say that the portfolio, as we see, is the portfolio we are estimating we are going to recover, that is the amortized depreciation cost, but there is a portfolio that could be sold in the market, and that volatility then is going to be determined in market value today, acknowledging that portfolio we are going to sell, or that we are going to sell at a reasonable value. If we have volatility, we need to go through the reasonable value of those instruments that are for negotiation, basis what the reasonable value is, because many companies would say, well, I have a solid portfolio, but I do need the flow, not in 30 or 60 days, but now. Then banks would give options. I can sell it to you under my administration, or you can lend me under a warranty. These are activities to be performed by companies. Yes, financial factoring and many other companies were not even handling, and those are the ones that would then be advised that in the case of the financial statements, you are not reflecting it because as the responsible party, we need to do it. And those who already have revelations and everything prepared are okay. But this standard is telling us that in terms of COVID, some companies will get started with the selling of their portfolio. That doesn't mean that the business is going to change, because their business is not to sell portfolios. You can remember how to assess a company that is waiting and the other company that is actually selling, and you are not changing your business. There could be some circumstances for you to sell your portfolio. That's something we need to disclose. And this information is for someone who has no access to the internal information of the company, and the accountant should then report to someone else not involved in the company whatsoever, and that you are selling your portfolio, but that is not your business. Your business is to receive it and collect it, but there is a circumstance that for the time being is steering you to selling it, and that is included in the standard. Yes, what I would like now, if you agree, Juan Carlos, is to get to know the financial statement from other countries' point of view, because this is international and interesting topic. We're going to touch upon other important topics, and for the sake of time, we are going to give you the floor later on, if you agree. Yes, no problem. Another aspect that we have in our financial statements that is and it is going to impact us in a great deal would be the inventory perspective for those who were with an over level. Now selling it is going to be very expensive for recovering or for selling inventories. So Pedro Gaytán will take the floor now. He's going to give us the impact of financial impacts on inventories. Yes, I believe that Juan Carlos was telling us something very important in terms of receivables. And now we see the inventory piece because in these very special lines, we have repercussions on results and costs that would require special focus due to pandemic. And this is about the appraising of inventories, because we all know that this is in the current assets consideration, and the IFRS is looking for ways to measure inventories at the cost or the realization consideration. The greatest will prevail. In this particular case, every company would have different needs in order to reduce inventories based on this realization net value, and mainly due to the low movement, due to the obsolescence of such inventories because of the effect of low sales expected before the pandemic. So we would then have to consider, in the particular case of the Mexican IFRS number 2, to classify the concept of the inventory sphere, merchandises, raw materials, and so on, depending upon the activity, if it is commercial, if it is industrial, if it is services. But that is the great problem, because due to the pandemic, it is important to get to give information to clients on the very particular case of every line included in inventories and financial statements. We would then have to observe the basis of measuring, like historical cost, the realization costs, and then we have for that the number 2 IFRS impacting quite significantly the financial statements as a consequence. Another interesting point is in terms of observing what we need to disclose within the financial statement in order to understand the whole disruption arising within companies, because in a way the very particular and fine detail is that we need to disclose information if the entity is applying the reasonable value, the investment properties model, and in idle moments like the ones we are experiencing right now, because undoubtedly the options chosen will then influence decision making by the investors, as mentioned by Juan Carlos just before. In this case, we would then have to consider as well everything regarding the indirect fixed production costs, but the bottom line here is that we need to apply financial reasons to what we are now discussing, because there are short-term operations that should be considered. Like in the particular case of inventory turnover, we know that according to the activity of the company, that's how the inventory turnover is going to unfold. And with this pandemic, we have a reduction by its own effect, considerations to include in our inventory analysis. Yes, now that you were mentioning inventories, this reminds me that when the pandemic got started, it is well known by all of us that many components and many merchandises are made in China, a great power, and that it was impacted, of course, in terms of not completing the cycle of operations because of the lack of raw material. But just look at the economy in China, because I've seen that nowadays they are practically under the same operation they were before the pandemic. Yes, undoubtedly, in the particular case of China, they are tapping into their own situation. So within this chaos, they will always find some opportunities. And since they are producing it all, undoubtedly they have markets that somehow could then displace the products. Of course, there are some products that would definitely not have that opportunity of being displaced that easy. Nevertheless, there are products that somehow are displaced. They already have markets that are institutionalized, to call them somehow, for the effect of making a turnover with their inventories. But every country has been impacted regardless of their size. Yes, now taking advantage of this introduction I gave you, and for you to continue with your presentation, this comment from David Guzman is quite good, saying that a great deal of inventories would then involve the treatment of fixed costs that are still incurred, even though production did not happen, and assign that directly to results of the period as a capacity of the plant not used production. And this is a specific standard. And whenever we have this type of situations, we also need to see the suspension for the proportion to be kept in terms of depreciation and cost. Wouldn't you agree? Yes. And now please go ahead with the rest of your comments in regards to COVID impact in these very important lines and how to deal with it. Yes, let me conclude by saying that undoubtedly that in our main subject matter, inventory, we need to be careful depending upon the type of inventory we're dealing with in order to avoid deterioration, obsolescence, even the way in which we keep up the facilities. We need to consider the storage cost for the effect of observing and not getting any obsolescence. If we have the premises leased or of our own, as we were saying, there are some points in we've seen some premises being closed, and the warehouse and the inventory and the care given to them, how is it going to happen if we don't have our own premises? I believe that is the bottom line. The proper surveillance, we need to avoid any smuggling, so we need to look out for the best way to protect our asset called inventories. Yes, Pedro, thank you very much for that. Taking advantage of this opportunity, whenever we have a manufacturing company precisely the production capacity is impacted and affected when there is an important decrease or stalling in the operation. In that sense, I'd like you to tell us the effects in this important sphere that is producing the future benefits of the manufacturing company. And yes, dear Carlos Reyes, what can you tell us in that sense? Yes, Sergio, indeed, these lines and this sphere is very important. I believe that we need to assess it under COVID circumstances because indeed the lower operations has brought as a consequence, and from the standpoint of the appraisal of the site and equipment, maybe the usage value is going to be impacted as a standard 16, and equivalence would say. And the idea is that we have a high deterioration risk due to the lower operations being conducted in Venezuela. And just to give you an example on how we are now tackling the property, the site and equipment appraisal and deterioration considerations. As we know, we have here inflation due to our very volatile currency. And whenever we apply this standard to property, site, and equipment, we have values that I would not even like to tell you. The amount of zeros that we have would not be good enough for any calculator display. But this cost given is reconveyed and it is recoverable. And that's where we need to use our judgment and the judgment of a specialist to determine the usage value of assets, and that is going to give us a constraint in terms of the excess that we could have whenever appraising the assets, basically the property, site, and equipment pertaining to companies. This is a topic that is extremely interesting, and of course I would then go to the rest of the non-financial assets, the long-term assets. But yes, right now you are only asking about property, site, and equipment, and I'm centering myself on that. But of course, Carlos, if you think that any other asset could then be necessary to mention, please do so. Because maybe I was very specific, but we can then touch upon any of these non-current assets. Thank you, Sergio. So certainly I wanted to give a comment just to supplement what our friend Juan Carlos was telling us. The financial instruments is one of the assets that we need to carefully go through, confronting this new reality given by COVID-19, but I consider all of the assets should be assessed. And when I'm mentioning all of them, let me give you the example, going back to financial instruments topic and going back to the fiscal or tax credits. I'm going to give you a very specific item that at least here in Venezuela is very important because of the tax voracity by our government. And many other regions would be experiencing that with the tax authorities in Venezuela, obviously, due to the inflation we are experiencing, and for my friends in other countries to get a better idea of what we are living in Venezuela, we have a devaluation here in Venezuela of approximately 1.01, 1.05%. This is daily. Daily. Wow. I'm telling you daily. Yes, so if you tell me, Carlos, yes, but how much devaluation could you get? Well, let me give you the formula. I'm going to 1.03 to be raised up to 30, and that is the monthly devaluation rate. So let me go back to the tax credits. And since we are subdued to this devaluation in Venezuela, the government, of course, would not run away from inflation. And, of course, they need their resources. They don't have the oil resources 5 years ago or 6 years ago. So they have implemented mechanisms in order to anticipate the taxes, maybe due to the added value tax, the VAT or IVA in Spanish, also over revenues, implementing mechanisms that are for collecting every 2 weeks for these anticipated payments of added value and over revenues. That's why the companies are paying beforehand in a great deal to the tax administration. Here in Venezuela, with the inflation we have, that would mean a significant loss because of this collection, and it is not a lie, and many of them would not live it up because you are not having this inflation. But in here, and just to give you an example in dollars, if you have $10,000 to pay upfront to the government, if you are then also experiencing 1.01 daily inflation rate, just imagine how costly it is to keep that up. 30% less. Yes, 30% less. If you had $10,000 as October the 1st, by the 30th, you would then as much 7,000. So you lost them. You lost them just by sitting here. You didn't do anything. It is not that you had bad business actions. Just by sitting here, you just lost them. And in those cases, we as auditors, we need to assess this deterioration to the entries. And many would say, well, the receivables by the state could not be punished anyhow. You need to give a provision for deterioration due to insolvency. Some would say that, some would keep that in some countries. In Venezuela, we have already disclosed how inexistent that is for us. You are losing your money before the government. You are losing money, and that's why somehow you need to determine the reasonable value that is going to be receivable from those items that you need to collect from the state. So just going back to the financial instrument topic in the case of inventories, and as Pedro was telling us, we also need to take two perspectives from the supplier that you can then recover for your inventories. It is not just about placing your inventory, because what I have is still to be analyzed in order to define if there is deterioration in that inventory that I have nowadays. I need to assess that, but also from the standpoint of the ongoing company, I need to assess the possibility of replacing inventory, because it would be useless if I cannot replace what I've just sold. I cannot operate. That is an important piece to consider as well. Okay, and going to the property, the site, and the equipment, then we have an important topic, the deterioration of these investment properties. As a matter of fact, we have experienced in our own flesh the loss generated by some clients because of the ownership of assets and investment. And how are we going to deal with the protection in order to consider our assets, even though we have a very important inflation? And it is something we are doing right now to get certain amount of bolívares, but that amount could be overestimated very probably. What we want is to get the expert's opinion in order to see what is the proper collectible value and acknowledge the loss, as the standard number 36 is telling us that we need to acknowledge that in our results. That's the comment that I wanted to convey. I would take the rest of the time if I keep on going. Well, now by revising the material we've gathered, it could be that this could also impact whenever you are capitalizing interests in property, site, and equipment. And now, since it has been also hit by the fact of not using the equipment for some time, what can you tell us about that, Juan Carlos? I believe that the image has frozen. Are we back? Are we back? Yes, you're back. Well, the capitalization of interest costs is a topic that for the time being should be pretty well assessed, because if we keep on giving this alternative treatment of capitalizing interest costs before the reality by COVID-19, the most likely thing to happen is that we are going to overestimate the value of property, site, and equipment, to which we are adding these other costs. I would try, and I would recommend as well, to deal with the usage value of such property in order to determine if in reality it is convenient and reasonable to keep on capitalizing in that way, because we are overestimating very probably the value, not the cost, the recoverable value of the asset. Here in Venezuela, with this ocean of problems, we have learned how to be very careful in order to see the recoverable value, and we've become a specialist on how to recover assets, and we still have a way to go, because that's something we wanted to discuss. And I was telling my associates Carlos Castro and Omar that we are estimating the use of a specialist for this exercise in order to determine and get support from experts in determining the usage values and the recoverable values of assets, because we consider that many assets definitely would not be able to be presented to the reconveyed value according to our estimations. We will need to reduce it and going back to recoverable value, because overestimation is going to set, and in many other countries that reality should be assessed pretty well, even though they have aids and supports and the government's being pretty active in those lines. Well, and lastly, because I'm also mentioning some topics that are going to be dealt with later on, here in Mexico, we would say that this would be a mix. So from the standpoint of the IFRS, the new one that just came into effect in 2019, I have the rights of use according to my non-current assets. And obviously, if I, in my contract, have a 10-year term and the useful life is 20 years, then the useful life is going to be a factor to determine. But anyway, we would have to run a deterioration trial and how it is going to impact us in those leasing contracts, because definitely the use that I intended to give to those assets is now pretty impacted in terms of production figures and so on. What can you tell us in that sense, please, Carlos? Yes, indeed, Sergio. That is a very important item that has emerged due to this new reality and these times with the 16 new standard. The usage assets that are acknowledged by the IFRS number 16 are property, site, and equipment. They are subject to the same controlling and demands than property, site, and equipment. We can even use the reappraisal method for these usage properties. And just to give you a quick comment, and if I may, Sergio, we have a new paradigm among accountants on how we can generate cash and resources from assets. And many of us would say, well, that asset is not actually mine. How am I going to acknowledge it as an asset if it is not even mine? I don't have the ownership as such over it. And then you ask yourself, but why would you want it to be your own? Are you selling fixed assets, or would you devote yourself to use it to produce and sell the products generated by that property, site, and equipment? So the asset is valuable as long as you may produce and recover its value through the generation of resources. And the property, in the end, would be nothing. Possibly, and let's be careful with that, you can have a marginal value at the end, and if it's yours, maybe you have a rescue value all the way down the line, and that would be the most likely thing to happen. But it is not the main objective why you are acquiring property, site, and equipment. So certainly, my dear friends, the acknowledged assets by the IFRS 16 that are acknowledged definitely for the time being would be one of the first ones we need to roll out deterioration trials. The most likely thing is that if it is not deteriorated, it is pretty close to a deterioration value of important dimensions. And this is due to the new reality that we are now experiencing, and that is according to my opinion, Sergio. Yes. Thank you very much, Carlos, for your comments. It is a pleasure to discuss with you about all these topics. And thank you very much. We are now going to another topic. We have 15 minutes before a break in order to talk about another topic that is quite related to whenever we have a series of events that were not foreseen and that would suddenly emerge, like it is our case. The insurance and coverage contracts definitely, and mainly if I am an insurance company, they are going to be impacted because of all these consequences brought about by COVID. So in that sense, I'd like Karina, and going deeper into the topic, to tell us about these effects. And maybe Kari is somewhere to participate. Or maybe Diana. If Karina is not there, maybe we can... Can you hear me? Very low volume. Very low volume, yes. Karina, can you hear us? I think she's getting online. Well, apparently you could not hear me, right? But now you do. You are now on the air. Welcome to our panel. Yes, we also have the chat option for comments. Yes, sure. Okay, so about leasings, right? Yes, the insurance, coverages, leasings. What can you tell us about the effects on this? If we have leasings, I believe that according to the discussion of an important case that could be useful as an example, according to the standard number 16, the leasing contracts are acknowledged at the current value according to the future payments. But what is the inconvenience brought by COVID? The standard is indicating quite clearly that the payments at the present value would be the fixed payments of the leasing contract. Why? Because if Sergio today is leasing a good, could give you the present value with payments that are not fixed, like the payments produced by a percentage of the sales. So I have a sales percentage, and I would then have to make a long-term projection and budget in order to define how these payments are going to be paid at what rate according to the value of income. And many companies mistakenly are bringing to present value the value of leasings of payments that are not even fixed. And now that we have COVID, Jose Antonio Rodriguez, you need to turn off your microphone, please. Yes, sure. So now that we have the COVID as a roadblock, now we have seen that many important firms like Deloitte and KPMG were mentioning uncertainty with the future payments and how they could not be included in the estimation of leasing. So now that this income is not included in full, and now that estimations are so high and with very important adjustments as the coming from leasing calculation, now we have a very important impact there in terms of the yes, indeed. This standard number 16 is telling us that we need to keep track in terms of future payments, but what I'm going to consider as present value is over the basis of what I'm going to sell. Maybe we could have two options: the rate that is coming from the sales percentage, or a rate of based on the market that could then give us a piece of the resolution for this issue, don't you think? Yes, sure. The inconvenient is because if I am paying a leasing, but this leasing does not have a fixed rate for payment every month, I won't be able to estimate how much I'm going to pay for that leasing to bring it to and calculate it to present value. And many companies, in order to show this as an asset, those payments that are not fixed and depending upon a percentage, we're acknowledging it as an asset and considering it in the estimation of present value. Now they have this problem for the lessor, but also for the lessee that was estimating that flow for that good. So for the lessor is complicated because maybe they would acknowledge an asset because of leasing, but that would be to reverse an adjustment for acknowledging leasing in the past. And the lessee, if experiencing any tremendous issue would have a tremendous issue for acknowledging it. And that would be in terms of contracts. Would you like to add anything else, Sergio? No, it just caught my attention, the problems that they would experience. And I can tell you that you cannot estimate over the percentage of sales, but you can take it as a reference point for the market rate, right? Yes, you're right. And in regards to insurance contracts, the insurance is even more complex than leasing because the insurance entities had certain estimations on how to consider their assets for any type of insurance. With this health emergency, the estimations have been impacted because maybe what they would regularly do as insurance companies is that they take historical indexes and prospections. In regards to this, they would then define their assets, but there is an inconvenience. And as Juan Carlos was telling us, this we were not expecting something like this. And we had this situation 100 years ago with the Spanish flu. Great change. And with COVID's arrival, we have a terrible situation estimating deaths. And for insurance companies, it is quite harsh because the standard number 4 has a great scope, not only for health insurance and death insurance, but I would like to center myself on that because that is the most impactful factor. We can see some insurance companies that were benefited because the incidents diminished considerably, but in many other cases, insurance companies have then return the percentage paid for certain insurances, and I would understand it, and maybe you would share the same perception because these are very large companies that envision in the long term, and they know that this crisis is not going to end any soon, so they want to get loyal clients that hold insurance contracts nowadays. And in regards to the stock market, we have seen impacts in the portfolios. We've seen the historical minimum, and we also have indexes of credit non-compliance because of payments past due. And maybe I could have hired a contract against some construction contracts or non-compliance to payments, and they have invested much money in order to solve these difficulties, because on the one hand we have the insurance companies saying that they would not cover this type of economic crisis and downturn, and those who got insured and not finding a clause actually saying that. So we then have these capital issues with insurance companies. The suggestion is that the insurance companies should assess the impact of those liabilities due to claims reported or claims not reported yet but incurred by those insured, and the indirect effects that would then be reported by the future claims and the advertising issues and reputation. So in order to wrap up, I believe that these insurance companies should then reconvey differently their liabilities, because they have future investment margins, they have expectations, budgets in terms of asset deterioration, and they need to go through their accounting policies. And going into the topic a little bit further, there are cases of economic crisis where the IFRS are quite clear, where some changes to policies could be conducted. But in these crisis times, we need to get a break. We need to break now, because at 12 I need to show you a video and also giving you different instructions for the rest of the day. And at 2 p.m. translation service into English ends, so we are against the clock right now. So right now is 11:55. Yes. At noon, 12:05, we will then have another screenshot, and after lunch we're going to get the third screenshot. Okay, Kari, after this interruption, we'll continue. We are just going to use 5 minutes for you to give your conclusions. Yes, as a fact, I was closing. Yes, you're right. Now, going back, As I was saying, what we need to do is that the standards say that whenever we change policies coming from financial crisis, those changes could also be considered in estimation because it is not coming from top management or results circumstances, but because the company and the world have changed, so what they are doing right now would not respond to the expectations of the company and the decision-making process of the company. So it is very important, and that's why I wanted to close my presentation with this idea. Any type of change coming from COVID in companies should be revised beyond policy changes. And we need to analyze pretty well if this is a policy change or estimation change, product of information happening because of the current circumstances of the company, so the information nowadays is not certain. So in terms of insurance companies, we need to go through policies, and as commented by our speakers today, defining them, the financial effect in a company. And that'll be all. Thank you. Thank you very much, Kari. So now we are going to use the break we were told about, so we'll come back 12:05. Is that okay, Frida?